Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, February 5th, 2025. Hope you're having a fantastical day. Anyways, I was trying to be clever there. Like I said, hope you're having a great day out there. It is a fabulous day here in Colorado. It is not too hot, not too cold. The sun is out, and me and my main man, Jake, wherever he wandered off to, we're going to go play some ball outside. Most of the snow has melted away. Yay! So, well, not right here, because right here in front doesn't get any sun, so it's like there will be snow there until like May. Anyways, all righty. Well, markets are mixed as investors digest weak earnings from tech giants and potential interest rate cuts. Alphabet is down over 8% after disappointing cloud growth and a massive $75 billion AI investment, while AMD slides on a weak outlook. Meanwhile, Treasury yields hit new lows as geopolitical tensions rise, with Trump's latest Middle East proposal adding to market uncertainty. But it's not all bad news. Ferrari is racing ahead, jumping 7% after beating earnings expectations. So before we break this all down, I need some help from you. If you could give me some thumbs up, a like, a share, subscribe, a follow, and press that damn notification bell. Because again, I go live somewhere 2:15ish somewhere usually, unless I have to run errands, in the afternoon before I finish up the day. So, all right, well, let's get into the markets. Dow Jones was up 0.71% today, 317 points, closed at 44,873. The S&P 500 up 0.41%, 24 points, closed at 6062. NASDAQ up 0.19%, 38 points, closed at 19,692. The VIX was down 7.96% today. It's at 1585. Canada up 1.15%. Brazil down Brazil up 0.25%, and Mexico down 0.63. In Europe, Germany was up 0.22, the UK up 0.61, France down 0.19, Netherlands flat at 0, Spain up 1.32%, Italy down 0.38, Switzerland up 0.68, and Portugal up 0.22. Russian exchanges both green today. The MOEX up 0.38, RTSI up 0.87. And the overnight markets, the Nikkei in Japan was up 0.08, Australia up 0.51, New Zealand up 0.29. Looks like the Chinese markets are finally open again. The Shanghai was down 0.63%. The Shenzhen component up 0.08. China A50 down 1.31%. DJ Shanghai down 0.28%. Hang Seng down 0.93%. And the Taiwan weighted was up 1.61% for the day. All righty. Good stuff. I know. All right. Well, let's hop into the market recap. Wall Street struggles for gains. Treasury yields slide amid mixed earnings and data. I mean, based on how the markets finished, I think people were in pretty good moods. I mean, even the NASDAQ made it back into the green. It had been red most of the day. All right. Wall Street saw mixed results Wednesday as investors bounced disappointing earnings, mixed economic data, and ongoing concerns about global trade tensions. While the S&P 500 and Dow Jones Industrial Average posted gains, the NASDAQ remained under pressure, dragged down by Alphabet's earnings miss, which fueled doubts about the profitability of AI investments. Investors also contended with President Donald Trump's latest political moves, including his surprising announcement that the U.S. would take over the Gaza Strip. Oh, wow. So I guess he's going to build a Trump hotel there, maybe on the beach. While markets largely shrugged off this geopolitical news, the ongoing tariff battle remained a source of volatility. Trump's decision to delay tariffs on Canada and Mexico for 30 days brought some relief, but new retaliatory measures from China reignited fears of a broader trade war. Oh, no. On the economic front, private payroll data from ADP showed a stronger than expected job growth, but this was offset by a slowdown in the services sector with a sharp widening of the U.S. trade deficit due to record high imports. Treasury yields fell to their lowest levels since December as investors braced for economic uncertainty. The benchmark 10-year note yield dropped nearly 10 basis points, reflecting expectations that the Federal Reserve will hold off on rate cuts in the near term. In commodities, oil prices tumbled over 2% as rising U.S. supply and trade war concerns outweighed Trump's push to curb Iranian oil exports. Meanwhile, gold prices hit fresh record highs as investors sought safe haven assets amid market jitters, with spot gold climbing 0.9% to $2,867.60 per ounce. That's a lot, folks. In the currency market, the U.S. dollar softened amid easing trade war fears, while cryptocurrency saw gains with Bitcoin rising 0.63% to $97,116.24 and Ethereum nearly jumping 5%. Investors now look ahead to upcoming earnings reports and economic data for further market directions. Yep, gold is expensive. When I got married 29 years ago, I think it was like $300 or $400 an ounce. I remember at the time the diamonds in our both of our wedding bands were probably the most expensive part of the transactions, and today it's probably the gold. All right. Well, let's get to some of these data reports that came out. First one, December international trade from First Trust. This was written by Mr. Strider Elas. So let's see what he had to say. The U.S. trade deficit surged to $98.4 billion in December as imports jumped while exports fell. However, total trade volume measuring both imports and exports rose by $5.4 billion for the month and is up 8% year over year, reflecting robust business and consumer activity across borders. Trade patterns have been highly volatile due to supply chain disruptions and tariff uncertainty. Companies rushed to secure supplies ahead of a potential dock workers strike on the East Coast and Gulf Coast in October, which ultimately lasted only a few days. With another strike expected in January, but failing to materialize, and President Trump prioritizing tariffs, businesses have been preemptively adjusting their supply chains. A key driver of December's import surge was industrial supplies and materials, particularly finished metal shapes used in manufacturing. As new tariffs on Mexico, Canada, and China loom, further trade volatility is expected in the months ahead. Notably, the U.S. trade landscape is shifting. While China was once the top exporter to the United States, Mexico now holds that title, with China slipping to second place and Canada close behind. Meanwhile, U.S. petroleum exports continued their streak, exceeding imports for the 31st consecutive month. In other economic news, auto sales fell 7.5% in January, but remain up 3.8% from a year ago. All right. One more data report here. January ISM non-manufacturing index, also from First Trust. Mr. Nate Guernsey put this together. The U.S. services sector continued expanding in January, but at a slower pace. The ISM services index fell to 52.8, missing expectations as both production and demand weakened. 14 of 18 major service industries reported growth, while 3 contracted. A decline in business activity and new orders drove the overall slowdown. The business activity index hit a 5-month low at 54.5, while new orders dropped to a 7-month low at 51.6. However, poor weather in January may have temporarily impacted these results. Hiring in the service sector remained stable, with the employment index rising to 52.3. 6 industries reported increased hiring, while 5 saw declines. Notably, the transportation and warehousing sector noted an improving labor market with more and better qualified applicants, signaling a shift from prior labor shortages. Inflation remains a significant concern. The prices index, while significantly lower, remained elevated at 60.4. 15 industries reported higher costs, with none reporting lower prices. Concerns about potential tariffs persisted, though their immediate impact on business activity remained limited. Meanwhile, private payrolls grew by 183,000 in January, surpassing expectations. Looking ahead, the upcoming jobs report is expected to show a 179,000 increase in non-farm payrolls, with the unemployment rate holding at about 4.1%. My dyslexic moment for the day. All right. So again, it's not all terrible. I just, feel like we're kind of waiting for something bad to happen. I know I say that a lot, but looking ahead, there's a lot of, for those of us my age, remember the game Pitfall, where you're jumping over alligator or crocodiles or whatever it was, and swinging across ropes. There's a lot between now and 5 or 10 years from now that we got to get through. We got, massive debt problem at the state, at the federal and state levels. We've got, an aging population of boomers that are going to be expiring here in the next 20 years. And, how do we take care of them? We got some big issues here. So I'm curious to see how those in Washington, because we've been ignoring it for the last, 2 decades. So, now's as good a chance as any to start fixing these problems. All right, last up from Zero Hedge, we are watching a rapid reordering of how the world works. This was written by Benjamin Picton of Michael Every of Rabobank. All righty. Global markets are navigating a whirlwind of geopolitical and economic shifts following the latest U.S. tariffs on China. President Trump's opening salvo, a 10% tariff on Chinese imports, prompted immediate retaliation from Beijing, which imposed duties on key U.S. exports, including coal, LNG, and crude oil, while also launching antitrust investigations into tech giants Google and NVIDIA. Additionally, China restricted exports of critical minerals essential for high-tech manufacturing, further escalating tensions. Despite the ongoing trade war, markets rallied on relief that Trump's delayed tariffs on Canada and Mexico for 30 days. U.S. stocks led by the NASDAQ climbed 1.35%, while 10-year Treasury yields fell as weakening job openings data fueled speculation about future Fed policy. European markets followed suit, with the Euro Stoxx 500 and CAC 40 posting gains. Crude oil prices reflected the tariff impact, with WTI falling due to China's restrictions, while Brent rose slightly after Trump's intensified pressure on Iran, hinting at potential military action. Meanwhile, gold surged to a record $28.42 per ounce as central banks and investors sought safety amid economic uncertainty. Beyond trade, major policy shifts are unfolding. The U.S. is considering ending its $800 de minimis tariff exemption, a direct hit on Chinese e-commerce giants like Shein and Temu, while Amazon stands to benefit. Additionally, Panama may revoke contracts with Hong Kong Hutchinson ports, signaling increased U.S. scrutiny over China's influence in critical infrastructure. In geopolitics, Trump's surprise announcement that the U.S. will take over Gaza, redeveloping it into a, quote, Riviera, while relocating its population, has sparked regional tensions, with Turkey seeking military bases in Syria and the potential for further escalations in the Red Sea. The world is witnessing a rapid and volatile reordering of global power dynamics. Curious to see how it all works out. I mean, personally, I think we shouldn't be, dithering around in the Middle East. And, honestly, we should, in the Far East, we should be, leaving things alone too. But, that's my anti-interventionist attitudes and being anti-war. So again, no young men should go, from the United States should go and get turned into pink mists anywhere, on either side of these conflicts. So, all right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to, wait for it, DSAFinancialGroup.com. All your financial planning needs can be addressed there. Give me a buzz. I'd be happy to help. All righty. Well, I think that's everything we had to cover for today. Right, Jake? Yep. All right. Well, we got some ball time in our future. Hope everyone has a wonderful evening, and I'll talk to everyone next time. Adios.